Hello, folks. This is David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone. Today we're doing market trends. Welcome to Market Trends, and I wanted to just tell everyone there are a few little changes. So if my computer acts a little bit strange, I want to just tell you I just had an update come through, and things change. PowerPoint's acting differently, so I'll just let you know that. Market is also being very strange, and we're going to of course cover that. But I want to just, of course, start off by sharing also some disclosures. And, there's a huge amount of just negativity. But at this point, we still have something that is behaving like a wall of worry. There are some things that could potentially become more problematic over time if people want to be bullish. Um, but I think at this point, we have to recognize those things and also see that things might remain a risk for a long time before they actually manifest themselves in actual price action. So this is our standardized returns of some of these ETFs we talk about. If you want to take a look at those, we've shared the link to the prospectus pages. My computer is acting a little bit strange and slow, so I want to apologize for that. It literally just updated. Um, right, I always restart before the webinar, and then it decided to do a major update. All right, so let's look at some of these things here. And I'm going to start off with actually my MTES page. Now, actually, let me just go over here. Go to tradestation.com, folks. I want to just show you this. You go here to tradestation.com, go to Insights. There's a blog post that has our the rundown for today's webinar. So all the main things we're going to be talking about are in here. Now, I think the big thing today is, can we hold 6101? I think it was a week ago we talked about 6101 was the level to break out. So remember, now at the top of the actual blog post, there's a link here. Downloads are available here. If you go to that, it will then bring up essentially a page that has a zip file, and the zip file has different ELD files. And if you load the ELD files, you can then load the workspaces we've created, the customized workspaces. Now, this is one I wanted to start with. This is our MTES. We haven't looked at this one in a while, but what this basically does is this shows the futures on an hourly and the cash on an hourly. And what's interesting to me is we're trying to hold a level here. If you look, it actually goes back, all the way back here to early December. So this to me is something that's important to look at. Now, I will admit that when I look at this, there are parts of me that think that this is something where it's going to try and hold here, and then people might look for a push further to the downside. Some of the things that are emerging now are potentially more problematic. The question is, will they actually turn into something real, or is it something that's on people's minds? So I want to just point out, trying to hold this level now is important. I'm also going to look over here at this workspace, which essentially shows the chart we have in today's blog. And what's interesting is you can see that we basically have, um, all the oscillators are pointing slightly kind of trending higher. But the risk is that this becomes kind of a false breakout and we get sucked back down into the range. And at this point, volatility is very low. But the fact is here is, with volatility relatively low, there is a risk here that we get sucked back down into the range. And at this point in time, I'm not saying it's going to happen. I think what really matters is, do we hold these old highs? Do we hold 6101, which was a previous high we had identified earlier? I think it's also important for us to realize that we are in a news vacuum right now. If you look at the actual, if you look at our blog post, you can see that we actually highlight a series of events coming up, upcoming events. And in particular, this right here with Nvidia next week, and then we get into some of the big AI events are farther down the road, longer term points to remember. So right now, I think we're trying to kind of hold above these highs, but the volatility is extremely low. We continue to have a huge wall of worry, and there continues to be evidence that there is not a lot of leverage money getting taken out of the market at this point in time. I also want to point out, if we look over on the Qs, let's look at the Qs, because the Qs are trying to hold a level also from. Actually, I'll just look on this chart. Let's look at an hourly on TradingView here. But there's a level here on the Qs also from back here. So it's basically January 23rd and 22nd and 24th. this was a level now that people might look for the old resistance to become support. I want to just point this out. This could be the first stop on the way back down into a deeper pullback. So let's just be clear. We have to kind of wait and see how this goes. And I think it's also a time when one of the things we might want to be thinking to do is to start to say, if we do get a deeper pullback, let's start to plan and make lists and identify levels and things for potential entries on potential names that may or may not be, that may be potentially attractive if things actually happen. Another thing that popped up, I want to point out, look at XLK, just a daily really quickly here, is that, this again did not really break out. And I mean, the risk here is that we basically get sucked back down the range. And I think we have to realize here is that depending on how you look at this, there can be an argument that we have not actually broken out and that we're still stuck in a range. One of the weirdest things about this market now is that like the S&P has been in some ways hitting highs while the big indexes have not been hitting highs. We have the S&P hitting highs and very few of the biggest companies in the market have been hitting highs. I'm going to show you an unusual thing on price grid here. So this is, I've loaded the S&P 500, but if we actually look here at the very biggest names in the market, I don't have market cap on this list, but this will show some of the biggest names. What's interesting is a lot of these companies have not hit 52-week highs in a long time. So if you look at the big names like Meta, it has, but Google has not made a 52-week high for a long time. But things like Microsoft, Apple, Amazon, they have gone, a time without hitting 52-week highs, and they've also been lagging on a year-to-date basis, which is kind of unusual. When I was preparing yesterday, I saw that of the 9 companies in the market that have $1 trillion market cap, only 2 of them have actually outperformed the S&P 500. So it's a very strange market right here. So of course, the big news today is this idea. Well, there's a few things. It's really a question of, will earnings actually start to hit a wall? And I think one of the things here we have to recognize is that the earnings growth, as we talked about, has been very strong overall. Last week we emphasized how it actually was surprising to the upside, even with people worried about tariffs. But today we have this big kind of guidance or caution from Walmart. But then the other big thing I think that's important to realize is that a lot of this talk about the government being more efficient is a risk to corporate profits. And I think people are starting to see that now, this potential risk of what could happen to things like the defense stocks. Trump says he wants to cut defense spending by a half or a quarter, whatever that is. That is going to, if that really happens, that will take dollars off of the S&P 500 earnings. That will also take jobs out of the economy. I mean, anyone who lives near a military base knows that there's all kinds of spending coming out of those military bases. Those people have leases. Those people have loans on them. There's all kinds of businesses surrounding military spending. So if you start taking that stuff away, it trickles throughout the economy. If you look back historically, FDR set up the military in a way that it would be promoting the economy. So if you start to talk about significant cuts in military spending, that will have knock-on effects in GDP and in earnings and in things like, I don't want to say bank runs, nothing like that, but you could have something where we start to see, wow, delinquencies start popping up. And now there's a problem with these, real estate, commercial loans and stuff associated with these different kinds of bases. So there's a way that this can actually trickle through. So the thing is, if the government if this Doge and Elon Musk push through the way some of the people are starting to fear, that could be the end of this bull market for a while. And I think we just have to realize that if it actually pans out that way, because the S&P 500 is trading at, high multiples. There's an expectation that growth is going to be strong. The estimates for Q1 have been coming down. Now, one view is that's just kind of a wall of worry at this point in time. But if it does actually pan out and companies start to guide lower and people start to get nervous, there is a lot that can be taken out of this market in terms of expectations for earnings and what that means for multiples and everything else. So here we have Palantir getting hit on this news. There was also some news about, what's his name, Alex Karp, filing some paperwork that would allow him to sell shares more quickly and things like that. He's the founder and CEO. But the key thing is that this combination of the cuts in military spending potentially, and then things like Walmart, these things are coming through and kind of hitting people's sentiment right here. So I think it's important to realize another name that's been interesting. Let's just look at this, AXON. This is the old Taser. It's actually been one of the leading stocks in the industrial space. And if you look at it, it's gotten just absolutely crushed. They do different kinds of military and police department spending, gotten absolutely slammed in the last 2 days. It's also interesting if you look at companies like Comfort. What was this called? Comfort Systems. This is like a company that does HVAC, but it became a big AI data center cooling story. And this stock was an industrial just monster for like 3 years, and it's really, hit a wall since DeepSeek. So I think we have to realize this market has taken multiple hits. We've had tariffs, we've had things, like the potential risk of, of higher inflation, but the DeepSeek and tariffs, those things alone, and now the idea of potential cuts of government spending and how that might trickle through to the overall market. So we have to realize now, when you're trading at 20 times earnings, things like this, are hard to just kind of absorb. And I think there's a lot of things here that are showing signs of breaking and weakness in the market. However, what is interesting is there are new names that are arising, and I think that's one of the things that makes this market so interesting. And we'll get to some of those, but I think it's important just to realize here that this idea of cuts to military and government spending, if it really does pan out, and you have to wonder about Congress and everything else, all these things are unclear right now in terms of what the new administration is doing. But the effect on S&P earnings could be significant, and it could also really hurt sentiment and really make people say, you know what, there's no reason to pay 20 times earnings when I don't know if those companies are going to keep getting, if that revenue is going to kind of, take a hit and it's going to hurt their business. So, I mean, this creates a new kind of uncertainty that I don't think we have seen, that I can remember, of anything of quite this magnitude. So I think we have to recognize that. There was also some talk about the cruise ships having some issues with the way they actually flag their ships or something. I mean, the thing is, when you kind of pull back the take the lid off and look at a lot of companies and things, there's a lot of things in there that people don't really question or look at, like how do they flag a cruise ship? I mean, these are kind of weird sort of business questions that now are starting to get asked that were not asked before. And I think that is something historically, when people take things for granted and then they go back and start asking questions about them, that can be a negative. So we just have to realize that there's a lot of things now popping up that are potentially a risk. Nonetheless, we are holding 6,100. Negativity remains very high. There's a lot of cash on the sidelines. The VIX is not very high. The dollar is weakening, and yields are more or less moving lower. So I think we have an environment here that, despite the negative things I just said, the macro side of it is not that problematic. So we look at the S&P 500 here again, like I wanted to do. Let's go to MTES. I wanted to actually do this quickly because if you go back, this is the hourly chart again of the cash index. Let's go to drawing and let's go to Fibonacci price retracement lines. If we actually come off this low here, I mean, we have, held above any, like a 50%, however you want to draw it. You could go back to the close of that day. And, but at this point, depending on where exactly, I mean, you draw this line, I mean, we have held like a 50% retracement of that move. So nothing here really, destroys this upward thrust that we've enjoyed coming off of that. Well, I'm sorry, that was the wrong place to draw. Drawing Fibonacci price, Fibonacci price retracement lines. This was wait a second. This was the inflation number. That was the tariffs. I normally don't draw on this chart. So we go from here to here. I remember seeing this earlier, to see that we basically have held a 50% retracement of that move. And so again, that kind of does validate the idea of this thrust being to the upside. Now, let's take a look. Now, on this chart, what was interesting to me is that you can again see here the 50-day moving averages is inching higher. All the moving averages, I don't have them all in this chart, but they're all in kind of a bullish sequence, all the short ones above the long ones. And so I think when we look at this overall, this still, we have a trend line here that we've broken and stayed above. So like I said, from my perspective here, technically, I mean, you can make all kinds of philosophical points why the market could be, in trouble. And I outlined those things. I think it's important to recognize what they are. However, at the end of the day, when we look at price action, we see a market that has very low volatility, and other things are sort of happening. So we do have that spectrum of being in a kind of stock pickers market, even with the kind of drop like we're seeing now. So I think we just have to see here is that volatility is staying low, and there all of the kind of momentum signals remain in a positive spot. So let's take a look now at the 10-year Treasury yield. And what I thought was interesting, I'm going to take this on a weekly chart, this is on trading view. But again, I mean, this is something now where it's just kind of stuck. So as we look out into the future here, I think it's important to realize that we now have the Nvidia numbers next week. After that, we have the State of the Union. Then we have inflation, and then after that, we have the Fed meeting. We also have German elections on Sunday, and it's interesting because global stocks are starting to outperform. Let's look at the dollar index. So it's interesting that I saw a headline today. A dollar index continues lower. So it's interesting here is we basically have Europe that has basically suffered for years because of the situation with sanctions on Russia and everything like that. And now we have the potential prospect of those easing. We have the potential prospect of something changing in Germany, which is the biggest economy. Maybe they'll kind of do something to have more Russian energy again, because that's been a big problem for their economy. So the thing right now is that the American market is trading at like 20 times earnings. You have global equities performing better. You have things, if you look over here on our MT main, you can see if we look here in key ETFs, you can see that the things like the Chinese are outperforming. I also have the Brazilian here. I can add EFA, which is the general global ETF. If you actually look at this, this is now outperforming. EFA is outperforming the S&P. China is outperforming the KWB, outperforming the S&P. So these, to me, are the things I think we're actually seeing here. Is that people say, "Wow, what if the U.S. government, cuts military spending or all these other things? What does that do to the American earnings?" Then they look over to Europe and they see, "Wow, well, maybe the situation with Germany, the European economy is going to get better. Maybe the dollar has peaked. Maybe China is doing pretty well." And I think this is what we're seeing now. And from my perspective, I think that we might actually see that this year might actually be a time when global actually comes back. And I think that's actually a thing to think about. We've been talking about it. It's been kind of panning out more or less as we've outlined in this webinar. And I think right now we have a trend that's taking shape in the thing like the strength in gold, the strength in these global stocks, the money coming out of a lot of areas across the S&P. So I think we have to realize that the industrial area also, this is a lot of things out there that can get hit from this sort of situation with the like the thing that Trump is talking about now, and create a lot of fear for people. Industrials are actually pretty expensive here. And then that also has knock-on effects to things like financials. So you take out industrials and financials, and that takes away all the kind of non-tech parts of the market, or most of them. All right. So Mr. Mussalem, he is one of the Fed policymakers, talked about stagflation. And again, I think that is something here that the market is kind of having this sense of moving away from America, kind of capital flight away from America or American stocks. America trades at 20 times earnings. So again, that's sort of what it is. I think we have to realize is that capital flight is something that does happen. It doesn't mean like the end of the world of the United States or anything. It could just mean a period of time when people look and they say, do I want to own the S&P, or do I want to look to other assets globally and things like that? And I think some of that is happening right now. All right. So another thing that's happening is that energy is outperforming. And it's interesting because today we had another big build of crude oil, and energy stocks are outperforming here. If you look on a year-to-date basis, look, they're actually the top performer. Now, I think what's interesting with energy here is not really that energy itself is bullish, but the fact is, if you look at energy, this thing trades for such low multiples. I think that's another thing here. People are saying, what is something that actually has some kind of like durable, valuation that I can actually be comfortable with? So I think we're seeing a lot of things here based on valuation, and that's just one of the important things to kind of realize. It's also more of a global industry. So it's interesting to see what the market is trying to tell us here, and that's what we really try to focus on our market trends. Remember, we do state of the market on Monday when we look at the individual indexes, and we'll look at things like XLE more. The last time we did state of the market, we actually noticed the fact that the energy ETF were starting to get more kind of constructive, and it is kind of in a spot here where it hasn't broken out, but there seems to be a little bit of a focus on this. And what I would say overall, when we really take a step back, is that we have to remember that right now we're in a news vacuum. Once you get closer to those Nvidia earnings, all this worry and anxiety about, the economy and the government and Palantir, it might be harder to keep those fears going when Nvidia's earnings are coming up and we're going to start getting a sense of how Blackwell is doing. So I think we have to realize now the chip stocks, and that's the big title we actually have for our webinar here, is that the chip stocks have been starting to come to life ahead of those Nvidia earnings, and I think that is the big story here. So I wanted to get to that, but I also want to address just the bigger things happening today. So we look down the list. We basically see that semiconductors, if you actually look at this list here on our key ETFs, you can actually see that semiconductors here, for the last, it's interesting if you look, wait a second here, there, industry ETFs, semiconductors are outperforming in the last 2 weeks. So I don't have the longer time frames here, but if you had the time frame of 6 months, you'd actually see that the semiconductors have been basically flat in that entire time. So I want to just kind of point out that semiconductors here have been starting to perform going into those numbers. And if you kind of look, we did a trading view idea on Lam Research, and that one actually has been kind of coming to life. But what's happening in things like Intel, which we had kind of talked about in some of our recent webinars, and I think also this is something now where when you look across this area, this is where people are starting to focus. And I want to just focus on the fact that next week we have NVIDIA earnings. And then in the middle of March, we're going to have the GTC AI event. So these are now things that are out there. And I think we have to realize it's easy to get really kind of negative right now based on some of the news we see right in front of us. But we also have to keep an eye on what's out there. We also have to realize that volatility is not spiking. We are holding 6,100 in the S&P 500, and you put all those things together, and it could just be something where we look at this and then we come back in a few days and we say, wow, people were just so negative. That might really be the situation we're in. So I think at this point, it pays to kind of wait and see. But I think we have to really realize one of the things we try to do in this webinar is we try to anticipate the upcoming events, look where the price action and see what's happening. And what we seem to see right now is we seem to see people a little bit freaked out about software because of the Palantir news. We see people, worried about industrials because of things being said about defense spending. And those are fears and reactions to news now. But you look at the actual trends playing out, you have those AI events ahead of us, which in recent years have been positives. So I want to just mention that. Now, another thing I think right now we're going to very quickly do is we go to price grid and we can start to look for companies that have been actually performing. So one of the things we do with this is we go to days since 52-week high and low. And we just look for companies that have recently hit 52-week high. So I'm going to go, and if anything has hit a 52-week high in the last 11 candles, I'm going to go and I'm going to throw in, I'm going to go to data, add label row. Now what I can do is I can just go up here and I can sort by these names that have pulled back, and I'm going to start to actually see. Now, of course, we have things like Axon and stuff that are getting hit pretty hard. But there are some other names here. A name like F5 Networks, this is one where I'm just looking at this now, and I think people might want to start to look for levels where names like this come into play. What did drive my attention here as we looked, first of all, is JP Morgan. Can JP Morgan get down to this low from back here? This low is right around 262. This is one that popped up for me on JP Morgan. Another one that popped up that I want to mention is Meta is here. You can see Meta's on the list. Meta is now pulling back. It had a 20-day winning streak, which was kind of epic. And now I think we need to kind of see here it is holding that 21-day exponential moving average. And, the fact is simply holding this level after a run like this. This might be an area where people actually look for Meta here to actually hold. The level I was looking at was something closer to this down here. But the thing about a name like Meta is that it's a true growth story. It's outperforming so far this year, unlike most of the other large companies. And the other thing is there's not any clear thesis here that the government's going to cause it any trouble. So this kind of pullback here in Meta here is actually one that's kind of grabbing my attention right here. Now, Costco, I want to mention, this was one also that recently had some numbers, and now it's pulling back. And I'm going to want to watch to see, can we get back down toward these levels, these highs from back here in mid-December, or maybe a little bit closer down, somewhere between the kind of 1,020 down to kind of 1,000 area on a name like this. it is pulling back. You have these old highs in play, and I'm kind of waiting to see if we can get down, kind of between, under 1010 on Costco and see if that gives us any kind of opportunity here. Now, last week we talked about Reddit, and we said Reddit might walk its way down the Keltner channel, try and get down, and actually it's just completely blown down to that level. And I think it's interesting that, this is also an area where it had run a lot. And, at this point, I'm kind of watching to see people might want to be setting price alerts around 160 on Reddit, because this is a name that, it had some issues with like the way the search algorithms and things work like this. But, Reddit is now emerging as a new kind of like major company. The economy in the world and our society has been changing a lot. And you have companies like Kodak that are long gone. But, when I was a kid, Kodak was like, I mean, it was a huge thing, and a lot of people, Kodak was like a huge thing in their life. And we have the old, CBS and NBC, and those things are gone. But those things were, they were like a backbone of American society for like decades, and a lot of those names have gone away. And what I'm trying to say with this is there are names that are now emerging that are arguably the new CBS or Kodak or whatever. And I think people might view Reddit as one of those names. So here we have something where people might want to look for this to get to the point when it can go down to a level that might look like support, and that could potentially be maybe around 160. Another name that is like that, and I'm surprised, interestingly, if you really look at Airbnb and Uber, these companies have actually struggled for the last year. These companies were added to the S&P 500 late in 2023, but these are also companies that are kind of like, a future. I mean, I'm showing how old I am to talk about things like Kodak, and forgive me, but the basic point is these are companies that when they get established, I mean, everyone knows Airbnb and Uber, these are names now that have an established place in the new American economy, and people looking for long-term sort of secular growth may be looking to names like Airbnb and Uber. And Airbnb grabbed my attention because it had this strong earnings and it's pulled back. And this is one I think people might want to just wait and see if it gets a little bit, closer down, kind of like around 150, around these highs here. It still has the exponential moving average coming up. It's still overbought, but this might be something where in the next week or so, a name like Airbnb could potentially get interesting. A name like Garmin also has been quietly executing and delivering, and they had a strong earnings. They gapped higher. Maybe people see it kind of get down around between 220 and 225. And I think that's something people might want to be kind of looking for in a name like this, just to see if we can kind of get down and hold those old highs. And then two others, these Chinese names I want to mention is V Shop, is at this point, I'm just kind of watching to see if this name can see the earnings on this one actually tomorrow morning. So I think this is in a very tight range, but let's just kind of see what happens. A lot of these Chinese names have been doing well here. So this is one I think, if you look at it, it's really gone nowhere. I mean, literally look for like the last, 2 years, essentially, it's gone nowhere. So the thing is, well, in this entire time, China was out of favor until right around like here. So the thing to remember to a name like V-Shop is that this is a Chinese e-commerce company. But the thing is that China has been out of favor. All right, well, we know that until like the last few weeks. And the thing is that if it has a strong earnings report and a long period of sideways movement, now with the chart, with China being in favor, this might be something where if the numbers are good, it might actually, and it starts to run, now it could have the potential to extend, especially when you look at that Alibaba report today. There has been that relative strength in China that was not the case before. So this is one that was jumping up on my list. Another one here that was interesting to me is just in general is JD, another Chinese e-commerce stock here that it's in this kind of tight range right here. And, if we get a breakout really much above kind of 42 to 43, kind of 42, 43 range, close above this level from the 30th, that might be also something here where it's gone nowhere. And you can say that it has this initial kind of bullish thrust. And now, the moving averages are lined up in a more long-term, potentially positive setup. So I want to just kind of mention there's another one that might kind of just kind of come to life. Let me just very quickly look over here, see if anything else really popped up in terms of names pulling back. Now remember, we have our average options here, so this kind of shows you have companies like News Corp or whatever this I'm not even sure what this company is now compared to, is it Fox? I don't even know. I don't think so. But the key thing is that, it doesn't trade a lot of options, so we don't care that much. But you see some of these names here, it highlights average options volume in blue. And so I think that's, one of the things I kind of look to see if it's going to offer the opportunity to have some options. Um, EQT is a natural gas name. I'm just looking at that now. All right, now let me just zip through the points here really quickly. I want to mention. Um, I do think that the German election has the potential to become a watershed event. I don't want to get too much international stuff, but in this case, in this moment, it could be important. So I just wanted to emphasize it is coming back. I want to note the fact that Microsoft is actually surprisingly holding some interesting levels here, and this also might be something people want to look at. It's been holding a level around 405, I think, or 403. So this is actually kind of interesting. It has this bearish gap here, and people might look for Microsoft to go back up and fill that gap above kind of like 420. So this is something I wanted to point out. Also, it's very interesting to me is JLL is a commercial real estate company, Jones Lang LaSalle it used to be called, and they basically are saying bullish things about commercial real estate. I continue to think that the real estate kind of investment trusts, the office, these they're not highly traded, but there's been so much commentary, people calling for them to have return. These are also not companies that are going to have the same kind of risks as some of the other names. Like, I mean, they might have some risk of government spending because they might operate offices and stuff for the government. But the key thing is that there's been a lot of commentary in a favorable direction right now for commercial real estate. And I want to just mention it just does kind of continue, and they have been kind of outperforming. So we have Rivian earnings tonight. Things are pretty quiet really until Nvidia. So those are really just the main things I wanted to point out. Hope everyone has a great day. We will be back on Monday with State of the Market. The link is at the top of the page here. Sorry if any trouble with my presentation today. I got to figure out what's happening with my Microsoft Windows having updated. It gave me a new background and everything. So I'll be figuring it out, but I'll see you guys on Monday. Hope everyone has a great weekend. Thank you very much.